Hi everyone, welcome to another episode of the Mizuho Week Ahead. I am Jingyi, market economist at Mizuho Bank. The theme for the upcoming week is political flares. Political flares dominated markets last week, throwing them into a state of flux. Well, a triumphant Trump against a failed assassination attempt last weekend set the stage for a week where market movements were driven by political considerations. US-China tensions bristled as the Biden administration floated severe restrictions if companies kept giving China access to advanced semiconductor technology, and Trump's threats on tariffs. That China's growth headwinds both domestically and externally remain was reflected in the JPY-CNY wedge, following Trump's warnings against the weak CNY and JPY, especially as there was nothing particularly new to excite markets at China's third plenum. Perversely, reference to quality growth over quantity may imply willingness to stomach slower overall growth. As markets await the Politburo meeting to get more details, sentiments remain cautious. Meanwhile, ECB held rates as expected, but leaving the September decision wide open on data dependence heightens the risk that the single-mandate central bank may encounter greater risks of costly policy mistakes in navigating the sticky inflation and stumbling growth quagmire. Point being, downside risk to growth and investments hampered by muted growth and heightened uncertainty amid sticky services inflation and elevated wage inflation could transpire to stagflation. The Fed policy had spillovers internationally was plainly demonstrated in Bank Indonesia's explicit remarks. The scope of easing would depend on Fed funds rate, USD use, and dollar strength, suggesting that any cuts by Bank Indonesia would be after the Fed. The Bank Indonesia stood pat as expected, but meanwhile, Indonesia announced that Prabowo's nephew would be appointed Deputy Finance Minister, which could allude to shifting power dynamics within the cabinet as Prabowo attempts to push for more fiscal spending. BNM looks to be the outlier and abstain from the global easing cycle, especially as growth powers up. Following quarters 1 4.2% outrun, quarters 2 GDP further accelerated to 5.8% year-on-year, powered by services, manufacturing, and agriculture sectors. Nonetheless, resilient services print arguably on the back of huge withdrawals from retirement accounts, casts doubts on the durability of sustained outperformance. This Friday, MAS is set to stay on hold through the July meeting despite greater geopolitical uncertainties and dispersion of risk tilting to the downside. This is mainly as disinflation is playing out, while the post-pandemic support in services and nascent manufacturing upturn led by chips buy some growth buffer. India's budget on Tuesday will still retain ambitious fiscal consolidation goals despite demands for more state spending in the context of more diverse political coalitions and the Modi government. This, however, falls short of catalyzing any imminent ratings upgrade for now. Elsewhere, South Korea quarter 2 growth could edge up slightly from quarters 1 3.3% year-on-year growth as already elevated manufacturing output limits further acceleration. Meanwhile, real estate remains robust and services should be supported as financial and insurance as well as infocom services offset a contracting wholesale and retail sales sector. All in, this inflation progress achieved thus far could mean that looking forward, growth risks or geopolitical considerations or domestic concerns could increasingly steal more of the limelight. With that, we have come to the end of the video. For more information on the key events for the upcoming week, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you and bye-bye.